All right, guys, so today I'm going to go over some trade secrets about how to make a strategy, how to properly trade a strategy. I'm not going to give you away my edge, which is this bot that I've built here, but basically I'm going to tell you how, once you find an edge, to properly trade that edge. Okay, this is actually probably more valuable than having an edge itself. Okay, maybe, maybe not, but in a sense, yes. Okay, and you'll understand why when I explain it. Now, I know that I've gotten some hate lately because I debunked the master strategy, whatever. This has nothing to do with that. What I'm going to show you is how to properly and effectively trade a strategy aiming for optimal F. Optimal F, in my case here, I'm not necessarily using the formula that Ralph Vince used to help Larry Williams turn $10,000 into $1 million in 1 year and win the 1987 Robbins World Cup of Trading. What I'm going to show you is a really quick and easy way to determine optimal F, and then I'm going to prove to you it works with a trading simulator that simulates the outcome of 100 trades. And what we'll do is we'll keep copy-pasting the outcome of those 100 trades back into the beginning to simulate 100 more trades, okay? Anyway, so this is a strategy I coded actually almost a year ago. Have not been using it live until recently, actually, because I was hoping to find something better, but I realized, especially when using this method that I'm going to show you, I realized how a 1.6 profit factor is more than you will need to be a profitable trader for the rest of your life. Okay, so what we're going to do is we're going to take this, the ratio of the average win to the average loss is a 3.81. So my risk to reward on average is a 3.81, okay? So that means when I risk 1, I win 3.81 on average. What is the break-even win rate of that? About 21%, okay? So what is the win rate of my strategy? About 30%. If we're rounding up in the first case, we're rounding up again. So that means I have an edge of 9%, correct? So what we're going to do is take an account balance. The futures trading account balance that I'm using right now, I'm actually trading micros, not minis, but is about, I started it off with about $700 a couple weeks ago, and now it's already at $1,200. My edge above break even is my risk per trade. That is the secret of optimal F. Okay, so if a break even on this is 21% and I'm winning 30%, that means I'm winning 9% above break even. That's how much I'm going to risk per trade. Now you might say, what's the math behind that? Honestly, I'm not a math whiz. But I've tested it and it works. So it's a 3.81 and the win loss is 30%. So let's say after about 100 trades, now this strategy takes about, on average, about 0.65 trades per day, meaning that it probably takes a little over 100 trades per year. It probably takes 150. But let's just go on the safe side. Let's just say that every time I press calculate is 1 year of trading. So 1 year from now, these are the results I can expect. Not necessarily, but this is a hypothetical. So after 1 year of trading, 1,200 becomes 11,000, okay? After my second year of trading, what can I expect? 11,000 becomes 72,000. Okay, so after 2 years of trading, it's now 72,000. Third year of trading is now 143,000. Okay, fourth year of trading, it is now 1.35 million. Fifth year of trading, got lucky this year, that is now 286 million. Seventh year of trading, was that sixth? Did I say fifth or sixth? Okay, I hope you get the gist now. You're seeing that 9% per trade seems like a crazy amount to risk, but actually, as you can see, in order to maximize potential gains, that theoretically, in less than 10 years, $1,200 has become $1 billion. Okay, so and now I didn't scroll through and show you, but as you can see, that it's basically taking these factors and giving something very close to those every time it calculates. Sometimes it'll perform a little bit worse, sometimes it'll perform a little bit better, depending on the order of the losses. Because it picks a random assortment of when those 70% wins and 30% out of 100 trades are going to lose. So depending on how many loses you get in a row and how many wins you get in a row, the results will vary. But generally speaking, it's going to trend upwards. I didn't have a single losing year. Now it's possible if I press calculate enough times, as you can see, the next one, to lose 58% of the account in 100 trades, right? Which sucks, but that's part of the name of the game, because let's say you lose 50% of the account one year. Well, what's going to happen the next year? You make a 333% gain on it, which means that you more than recouped your losses from the last year, correct? So even though you may have some bad drawdowns, that's optimal F. If you want to make the maximum gain, you can't worry about a 60% drawdown. It can't scare you, okay? Because you have to know, you have to trust the data and the math in the long run. So this is the trading secret I give you. I am not willing to give away my one best, most proven strategy that actually is backed by hard data. I'm sorry, okay? I'm not going to do that. That would be stupid, okay? Because I don't want to lose this. But what I just gave you is a gem that once you find something that has an edge that's noticeable, like something like perhaps a 1.6 profit factor, maybe it won't be that good. Maybe you'll find a 1.3. A 1.3 won't become $1 billion in 10 years from $1,000, but it'll become $1 billion in 15, 20 years from the same amount. Hey, that's better than nothing, man. That's still really freaking good, right? So find an edge, and I would recommend using NinjaTrader to backtest. Do not use TradingView to backtest. Trust me. TradingView's data is less reliable, and the way it calculates backtests is not accurate. So do not trust TradingView. And I could make a whole video on it, but I'm not going to, because honestly, I'm sick of backtesting on TradingView. It's not good. Okay, the way it calculates stuff is inaccurate. There's strategies that look profitable on TradingView that when you calculate the same strategy on NinjaTrader, you find out it's actually not profitable. So anyway, there's that. But the point of this video, I've shown you that the optimal F is the edge you have above break even. The percentage edge that you have above break even, the numerical distance that your win rate has above a break even win rate, based on your risk and reward, that is what you risk per trade if you want to make the maximum money possible. It is risky technically, but as you can see, I ran about 10 simulations, and in only one of them did it actually lose 50-60% of the account, which, you know, not pleasant. But again, with the way the system works, that even when there is a big drawdown, it will inevitably get recouped eventually. So you just have to trust the system. Okay, so that's all really for today. I hope this helps you guys. So go out there, find your own profitable strategy, and then this is the way to trade it if you really want to make maximum gains. Okay, this is some trade secret stuff. I hope this helps you guys. Take care, and I'll see you next time.